And as a matter of fact, so let's take that one for a minute. You know, lender paid or a borrower paid comp. Now, in borrower paid comp on a TRID loan, you can change that. It cannot go over your normal compensation, but it could go lower. But a lender paid comp, it has to be consistent. So there's two things that we can do that you can't do on a TRID loan. And you could do this on your business purpose loans. You can split comp front and back. Why is that important? It's important because let's say, for example, you know that you feel the rates are going to come down, and so does your client. So you want to do a loan and you want to do a 1-year prepay on that loan because you know you're going to refinance in a year, right? Well, if you're going to refinance in a year, does your client want to pay at 1.5% or whatever your charge is up front on a loan that they're going to refinance in 12 months? Maybe not. Maybe that doesn't seem to make a lot of sense. So that your answer is, let's do a lender paid comp. Well, maybe if you do a lender paid comp, what does that do to the rate? It increases the rate, right? So if we have a higher rate, maybe we're not going to cash flow. So we can't put it in the back because the rate would be too high. And we can't put it in the front because, well, we can, but the client doesn't like that, right? Because they're going to refinance it in 12 months. So being able to split comp is really nice. So normally a half in comp is, you know, a point in comp is half in the rate, right? So it's half of whatever you're charging. So let's say you charge 1.5, for example. You could charge 3/4 up front, and then you could get 3/4 in the back, and that would be 3/8 in rate only. So maybe you couldn't afford to put 3/4 onto the rate because then it wouldn't cash flow, and then you get hit for a negative ratio DSCR perhaps. But you might be able to squeeze 3/8 into the rate, and they know they're going to refinance that anyway. So that's one of the things that gives you the flexibility to do that. You can charge 1.25 up front and do 1/4 into the rate. You could put 3/4 into the rate, whatever fits, but it gives you more maximum flexibility. So on this flexibility with comp, we allow you to change comp as long as Manny's okay with it, because the broker's got to agree. But on a non-TRID loan, we allow you to change comp on every single deal. Oh. Now you can't do that in your owner occupied, but on your TRID loans, so you can charge up to 2 points in the front and 2 points in the back and get 4 points comp if you want to. On a bigger loan, you might choose to take more comp and still do lender, or less comp and still get lender paid. On a smaller loan, you may choose to charge a little bit higher comp, so it's more consistent with what you're charging other borrowers that are doing bigger loans. But you can make it a little bit more even on that, because on a big loan you may not want to charge quite as much, and a littler loan you might want to charge a little more.
Which means that, let's say our comp is 1.5.
Yes.
And to make things work, numbers wise, I will reduce it. It's like the same thing. It's combination between upfront and back. So I lower a rebate, which will cover. I'm going to do it as a borrower's paid. Mm-hmm. And I will have a rebate on the back, mm-hmm. which I can get paid from the rebate.
Yeah.
Because otherwise, I did yesterday, I was told that I cannot use it, only borrower can use it. And that I decided to give them break and use this rebate to pay for appraisal.
Yes, but that's another thing. When normally lender paid comp, if there's a credit, the credit can only go to the borrower, and the borrower can only use that for any non-you closing costs, right? They can use it for appraisal, they can use it for title, but they can't use it to pay you. At our lender, on a DSCR loan, I can check to see if we can also do this on an owner occupied, but this is the first lender that I've worked at that allows me to do up to 1 point in lender credit can go to you. Anything more than that, we've got to call it lender paid comp.
Yeah.
So we allow up to 1 point, and some of that can go.
Case, yes.
Some of it can go to you, which is nice. And I haven't been able. I haven't been able to do that with other lenders, so that's good. The other thing that comes along with this non-TRID for business purpose loans, and it's state by state, but if the state allows it, you can actually pay a realtor a referral fee. Now, the realtors in California doesn't allow this, but other states do. And those states that do, you might want to call in, and we let you lend in many states, over 30 states, that does not require a license for the business purpose loans. So some lenders, like when I was at Angel Oak, I was not allowed to do that. And when I was at ARC, I was not allowed to do that. Here, there's a list of over 30 places. So you will have the ability to do business purpose loans in those states.
In other words, we can announce or create a marketing piece to real estate agents in those states, letting them know if you have investment purpose loan or it's rental property, we might be able to assist you and give you a referral fee.
Exactly.
And the referral fee comes from our own commission, basically.
Yes, I mean, technically we can do it at title. It's easier just to, let's say you wanted to pay them a commission of a half a point. You could charge 2 points and then you pay them after.